Good evening, everyone. Time for another silver update. This is the daily chart of silver provided by netdania.com. You can click on the link below. You can see we've got our major formation here. These lines could have been drawn a little bit differently. This one, maybe another one. It's hard to get all the touch points lined up. If we draw it like that, then we're breaking out of the formation, but otherwise we've got a ways to go before we break out of the formation to the upside. A breakdown below 26 would be out of the formation to the downside. So it's still just shaping up. Gold is very, very similar, but it's not nearly the size of the pennant, and that's of course because gold was not nearly smacked down as hard as silver was, which is always the case because silver is the most manipulated commodity in the history of the world, so that's not surprising. Now I wanted to get to the question of the night, and that actually was a topic that I planned on addressing, and it's about 401ks, and this is from Rick Sparkman, and he says, Brother John, I am newly registered to your site and have been viewing it for a while now. I'm sure you've been asked this before. I'm stuck in a corporate 401k plan and not ready to retire, but I can see what is coming. What type of funds within a 401k should I park my money in? Is there an ETF, I think he means fund for gold? Also, is it possible to pull my money out of the plan? Help, thanks for your knowledge. I can see how you help many people keep up the good work. Well, let me say I'm not an investment advisor, so I don't give investment advice. I'm just telling you my knowledge and my views on stuff. The 401k plan is designed to, I will say, trap you into it. If you want to see my first Office series, I'll link that below. My first Office series covers the 401k, and it's a discussion about how you can be trapped in it. There's some things you can do, but really if you want to get your money out of your 401k plan, the only thing you can really do is quit your job. And if you do that, you have some options. You can roll it into an IRA, and then you have a lot more control of the money. Some people have even run businesses with it or done a lot of things if it's in a self-directed IRA. I believe it's the Dollar Vigilante, Jeff Berwick, and he has a program for people who can move that money offshore into a foreign LLC. So there's a lot more options if you get it into an IRA. Ultimately, I think that they're probably going to try to grab both the 401ks and the IRAs, and then that's probably going to be the end of it at that point. So people who are really serious about it are considering their options. It's a very difficult decision. The other thing you can do is you can borrow against your 401k. You can borrow up to 50%, I believe, and you can structure a loan out to 5 years. If you are buying a house, you can structure it out to 10 years. I think that's the only way you can do that. You can also take an early disbursement if you're old enough, but that's different depending on the plan. So that's all. You have to remember that your options in your plan are selected by your employer and what type of plan they set up with the company that manages them. And on mine, it's managed by Fidelity, and I actually took a screen cap of that, and that is here. Now, what's very interesting about that is that my selections that I had were kind of limited but traditional selections where you had growth. You could have a growth fund, you could have different kinds of funds, you could have tech funds. There was about, I believe there were about 20 or 30 selections. Now, just recently, J.P. Morgan took over. They became whatever the term is for it, whether I don't know if it's trustee or whatever it is. Anyway, it's J.P. Morgan, and you can see here, very interesting, that now they've gotten these target date funds. So the way it works is they have you invest in a target date fund based on your target date of retirement, and then supposedly the fund becomes more aggressive as you go out in the years. So in theory, this 2050 retirement fund here should be the most aggressive. That's what you would think if that's how these things work. You'll note that if you look at the return numbers, you can see there's a 1-year return, and you can see there's only a 1-year return and life. So this is new. This is something they just did as of date 7/31/2012. So pretty much just a year ago they changed this all out, and you can see the returns actually decrease as you go out in the time horizon. That would be the opposite of what you would expect if these things work out the way they're supposed to. The more aggressive should be out farther, and the less aggressive should be the near, and it's exactly the opposite. You can see the same pattern holds also in the life of it. So that's a good indication that it's not working out so well. But even more importantly than that, the reason I showed you that is I believe that these target date types of funds that they're doing, and by the way, you can't, you don't even see what's in there. This is another step removed. I mentioned last night when I was covering Priceline, of course, how the Wall Street insiders loot your money out of your retirement by giving themselves cheap stock and selling it back to you. And now here, this is, in my opinion, an attempt to begin to streamline what is going to be probably the seizure by the government of these funds to create another Social Security, a public pension system on top of the Social Security system. And this, in my mind, the fact that they're targeting these with these 5-year dates, that looks very similar to some of what the government's proposing. And I'm going to cover that here when I look at this article from Ann Barnhart, and it's called The 401k Confiscation, the Ghilarducci Plan, Parts 1 and 2. And there's a Human Events article that's cited here. You want to read that too. And I'll read some of what Ann says. And she talks about this Teresa. I'm going to watch a little bit of her video. She's a member of the faculty of the New School in New York City, which is a socialist university. And so she goes on about that. Now, she quotes from the video, or it could be the article. She says, quote, if subsidies for 401k style plans and IRAs can be reallocated to guaranteed retirement accounts, why not use this money to shore up and expand Social Security? This is certainly an option. And Ann says, this is an admission that there is no lockbox. In effect, on the GRA money, it would be a flipping free-for-all. The 401k and IRA assets in the United States are currently pegged at over $6 trillion. The Obama regime would instantly borrow against that money and burn through it in the blink of an eye in the Ponzi scheme method of Social Security. It is widely thought that the first group to be bailed out by GRA seizure money would be, wait for it, unions. SEIU is massively underfunded on its retirement obligations. So yes, the Obama regime would seize your retirement money and redistribute it to Andy Stern and the kids over at SEIU to bail out their corrupt, lying, cheating, scheming communist butts. No wonder Andy Stern is the most frequent visitor to the White House. Well, that is if you don't count Marcus, who gets the really smooth coke from Costa Rica. I don't know what she's talking about there. So anyway, this is the Ghilarducci plan, and I wanted to have you listen to a little bit of her presenting this plan, and you can kind of see where she's coming from.
Also, if someone has actually saved enough, managed to keep the fees low, not withdrawn money when they needed it before they retire, they have these accounts have another flaw, that when people come to the point of retirement, they tend to take the money out in a lump sum. And when they take the money out in a lump sum, they often spend money for vacations, remodeling, moving, and that erodes the money that they spend when they're 65 and erodes the amount of money they need when they're 85.
So you can see that you dum-dums out there who are running your own 401k plan, you're not to be trusted with your own money, because you might go out and spend it on something like a house or remodeling or something like that.
The other problem with 401k accounts is that they are financial assets that a worker must manage on their own. Most people don't have the training to manage their money on their own. And even if they did have the training, we've seen from financial managers who are professionals that they make similar mistakes, which is they get optimistic during expansions and very pessimistic during a downturn.
Again, so you're a dum-dum, and you don't know how to invest your own money, so we're going to invest it for you.
So individuals who aren't pros, and even the pros, make the mistake of actually overvaluing assets and buying a lot of assets when the prices are high by historical standards, and they tend to sell their assets when prices are low by historical standards. So most people buy high and sell low, which is the opposite of what folks should do. The other problem that can't be solved by good intentions or good education about finances is that people can't time when they're old. They're born when they're born, and they turn 65 when they turn 65. And if that happens to be at a time when the financial markets are down, there's absolutely nothing an individual can do about.
Again, same theme. Now, the lie of that is that you can't plan for your own retirement by becoming more conservative as you approach that date. That's the advice of any certified financial planner that's out there. The first thing they're going to ask you is how old are you and what's your retirement date, and they're going to begin to uh, design your portfolio based around the amount of risk you can bear with that retirement date in mind. So that whole idea, of course, is bogus as well.
So what Obama's plan for a universal 401k system does, in a nutshell, is to expand the commercial, voluntary individual account system. And there's nothing wrong with that system except that it's voluntary, it's commercial, and it's directed by individuals. That's a little bit of a joke, but it does point to the fact that the 401k system is an experiment that's failed, and that when we look to pension reform, we have to go beyond the 401k promise and hope.
Okay, so I don't know if you caught that, but she said that the 401k is basically free market, and that's bad, and that there's individual control, and that's bad, and that you have a choice, and that's bad. So what she's for is government control, no choice, and so it's pretty clear that how she views your ability to manage your own money.
So in early March of 2009, an organization called Retirement USA, which is a group of pension advocates, worker representatives, and other academics who are really interested in a comprehensive pension reform, came out with a couple of principles that any reform should follow. They felt that we should no longer have a system where only 50% of the workforce has a supplement to Social Security, that pensions should be universal. They should be mandated. It's the only way you can make everybody have a pension.
But I thought we already had a mandated system. It's called Social Security. So why don't they just increase Social Security benefits? Well, of course, we know the reason. They're broke. And the reason why they're proposing this is so they can steal more of your money because they're broke.
And also the pension plans should be structured so that people have retirement income for the rest of their life. Also, a pension plan should have the employees and the employers contribute, because we have to get beyond a 3% contribution rate. The government should also be helping people who need the help the most. We should not have tax breaks that go for retirement savings that go to people in the very top bracket. It doesn't make any sense. If the government is going to lay out money to help people accumulate retirement funds, they should do it for.
Okay, so there's your typical liberal lie. If the government's going to lay out money, the government's not laying out any money. You're talking about not taking money from people. That's not the same thing. So this is similar to the earned income tax credit, where they actually give a tax refund to people who've never paid any taxes. Now, how can you give a tax refund to someone who's never paid any taxes? That's insane.
For lower income and middle income groups. The other principle they had is that retirement contributions should be pooled and professionally managed, that you shouldn't have x-ray technicians be expected to time the market, structure an asset portfolio that meets her or his needs.
Again, you're too dumb to manage your own money.
That's not what x-ray technicians should do. They should be paying attention to their jobs as English professors and others of us who go off in our work to do our.
Do you get that? So the communist professor here is telling you that you need to be paying attention to your job. We'll take care of your retirement for you.
Trained task should not have to add another profession onto our lives in order just to have retirement. So retirement contributions should be pooled and professionally managed. That's another principle of Retirement USA. This minimizes costs and it also smooths out financial risk. Now, the Obama plan does not include any of these principles. In fact,
now you've got to understand, she's criticizing the original Obama plan that was proposed, that the idea was to create these universal pension system for everyone. But the original Obama plan was to expand the existing 401k system to cover more people. Now she's very much opposed to that. She is for the government taking it all and doling it out.
The Obama plan really only helps one identifiable group, and that is the mutual fund industry. They have gotten most of their profits on the retail brokerage side in the last 10-15 years from the expansion of the 401k system. They make a lot of money from these very high fees in 401k accounts. They're very worried, the Wall Street mutual fund part of the industry, part of Wall Street, are very worried about their future, as they should be. And Obama's plan falls right.
What does that mean? Is she implying that, as they should be, does that mean that someone's going to get rid of them?
Right into their laps. Millions and millions of people will have these retirement accounts, and they really are encouraging the Obama administration to propose this. Obama is not the only entity that is looking at what a retirement reform system should look like in detail. In the last 2 years, myself and 2 other academics working alone, we haven't been working independently, we're quite sort of pleased to find out that we've come to the same conclusion, have come to the conclusion that we need a mandatory system. John Foreman at the University of Oklahoma, working with Adam Caruso at the Urban Institute, have proposed one mandatory universal pension system. Professor Alicia Manel at Boston College has also proposed a version of a mandatory pension system. And myself, working with, as I've said, the Economic Policy Institute and the Rockefeller Foundation, have a specific proposal, and that's what I'd like to describe.
Well, isn't that surprising that a whole bunch of communist professors at different communist universities have come up with one communist solution? So that's enough of her. It's pretty obvious now. This is kind of not gone anywhere, but it's waiting in the wings. And this was actually at a time, there were other parts in this video. This is in 2009. She was alluding to the losses. So that's something that you want to keep your eye on very closely here, is that they're really not going to have an opportunity to launch something like this with the market the way it is. You can see that the Dow, if this chart ever comes up, the Dow made that bottom in the spring of 2009, and that was the right here. That was pretty much the beginning of the Obama presidency, and you can see that the entire length of Obama's presidency, pretty much the market has rallied. It's rallied from roughly 6,500 to 13,000. So that's a doubling of the market. So a lot of the arguments that she made at this time when she was giving that presentation about the market are invalid now. So the question is, what has to happen to the market for them to make these kinds of proposals? How much pain does there have to be before people go running to the government to bail them out? So it's coming. I believe it's coming probably after the next downturn, next serious downturn in the market. People have been through the .com crash. That doesn't show up so much on the Dow, but it does on the NASDAQ. And of course, people went through the 2008 crisis. Then if we get another downdraft here, that's probably going to be the time when they launch their proposal that everybody be protected by some type of universal pension insurance. And hopefully those of us who have any money in that system can get it out and get it into physical silver. Of course, that's going to be your best retirement plan. You can see that physical silver has by far outperformed, this is the paper price, but of course they correspond, has by far outperformed just about every other investment. Back when we were at these prices here in the 30s and 40s, it was clearly the best investment of the entire decade. I don't know if it still is, but it's up there. I think I saw an article today saying that it was up in the top 4. And of course, I believe that we're in the process of making a very large bottom in one of the largest pennant formations that we've ever seen in silver, and we're about to rocket higher. So a lot of those who have had money in 401ks have taken them out, put that money in physical silver. I think those people are probably going to be really well rewarded when silver takes off, and I believe it's going to eventually go through that 50 price and then much higher into triple digits. And we'll talk to you next time.